The weakening ruble is a direct result of the costly war that Russia has been fighting since 2022. It is an extremely difficult situation, caused by a drastic budget deficit that was previously virtually non-existent. At the beginning of the year, there was a well-publicized budget gap that had already exceeded the limit for the whole year. Russia is now struggling with rising budget spending and falling revenues, both due to the slowing economy and lower revenues from oil and gas exports. In the past, Russia had no problems with budget deficits and its debt was low, especially compared to the West. Now, however, deficits have become a reality, and the debt-to-GDP ratio is approaching 20%. In this situation, limited external financing is becoming a problem. Fiscal difficulties are growing. Evidence of this can be seen in the introduction of a tax on excess corporate profits in the middle of the year. It is difficult to predict the extent of Russia's economic problems, as much depends on the outcome of the war with Ukraine. However, it is safe to say that the worst is yet to come for Russia. In addition, the quality of the data published by the government in Moscow is becoming increasingly questionable, and confidence in Russian economic data is steadily declining. In this context, Russia is moving closer to China, where there are also serious doubts about the reliability of macroeconomic data. The reorientation of the economy towards arms production may lead to short-term GDP growth, but its value to society and its potential for long-term economic development appear small. This, of course, assumes that Russia does not succeed in its ongoing war with Ukraine, which is supported by the West. There could also be serious long-term demographic problems, exacerbated by frontline casualties. The weakening ruble is a serious problem for Russia, and its weakening is the result of a complex set of factors. The weakening of the ruble was already noticeable last year, but the situation became particularly difficult in the spring and summer. The sharp weakening of the ruble has contributed to rising inflation, which is much higher than official indicators. Official inflation is 3%, while unofficial inflation is around 30%. This situation is now extremely negative for the Russian economy. The roots of these problems lie both in the war that is being waged and in the lesser-known but significant printing of money. There are currently about 3.8 trillion new rubles in circulation, or $38 billion, much more than the budget gap. The government has injected additional fresh money into the economy, as Russia's foreign exchange reserves are already running low, which in turn has exacerbated the current crisis. The ruble has lost value against Western currencies in recent weeks, peaking at 100 rubles to the dollar. This is lower than in March 2022, when there was a currency panic, especially among those wanting to leave the country. The central bank was unable to offset this fall quickly because it had no access to foreign currency reserves frozen in the West. The weakening ruble has also contributed to rising inflation, which is an additional burden on citizens and the economy. In summary, the weakening ruble is the result of Russia's complicated economic situation, rooted in the war and the introduction of additional money into circulation. These financial problems are becoming an increasingly pressing issue, and the falling value of the ruble is having a negative impact on the country's economic situation. What this means. The effects of these phenomena are increasingly visible in the market, and the outlook is not optimistic. As a result of the newly created rubles, more and more people are choosing to withdraw funds from banks and seek more stable currencies, primarily the dollar and the euro. This growing demand for foreign currency is leading to a further depreciation of the ruble. The result is a significant increase in the amount of cash in circulation, which is 4 times higher than normal. Many people have begun to hoard dollars and euros en masse, and these currencies are now becoming the safest investments. It is worth noting that people are increasingly choosing to keep these currencies at home, fearing future restrictions on ownership. Recent developments are introducing new regulations for foreign currency holders, limiting the amount of money that can be withdrawn in foreign currency. This is not only a problem related to the devaluation of the ruble, but also to the impact of sanctions, which have hit Russia hard. Forced to change its trading partners, Russia now does business with Asian countries such as China, India, Bangladesh, and Pakistan. However, payments in these transactions are often made in currencies other than the dollar. This poses a challenge because it is difficult for Russia to use these currencies due to insufficient imports of goods from these countries. The Russians have tried various solutions, such as exchanging rupees for rubles, but have run into problems with trade imbalances. Deposits in yuan are gaining in popularity, as money in this currency is less likely to be confiscated by the government. However, the euro and the dollar remain the most popular, as they are seen as the safest investment options, given the uncertainty surrounding Russia's economy and politics. The Russian economy is currently facing a number of challenges, and its troubled state is not just a result of the war and the weakening ruble. There are other significant factors contributing to the country's economic difficulties. One of the biggest threats is the apparent economic growth, driven mainly by defense spending. The true picture of the economy is distorted, with the apparent recovery misleading both the Russian government and Western countries. Russia's central bank predicts that the war will last until 2026, meaning that there will be enough money for the war effort until then. At some point, however, Russia will be forced to break this vicious cycle of arms investment and focus on civilian production. Another serious challenge for the Russian economy is competition from China, the main trading partner on which Russia is becoming increasingly dependent. The financial problems of Vladimir Putin's regime are primarily the result of the doubling of defense spending to $100 billion in 2023. This is a huge proportion of Russia's total public spending for that year. Fighting aggressive wars comes at a cost, and since 2022, Russia has been running a budget deficit, which was virtually unheard of before. The increase in budget spending, coupled with declining revenues due to both the economic downturn and lower revenues from oil and gas exports, is increasingly challenging for the Kremlin. Potential end. 25 years ago, the collapse of Russia's financial system brought great hardship to the country and virtually ended a period. Now, the anniversary of that crisis has coincided with the current collapse of the ruble, which represents a desperate attempt by the authorities to contain the full catastrophe. In 1998, the Russian government's policy was to hold the ruble's exchange rate steady, despite the fact that it was an overvalued currency. The refusal to devalue the ruble continued until all the country's financial resources were exhausted. Only then was the ruble's exchange rate released, but this was accompanied by bankruptcy. The current Russian government, which stems directly from this post-bankruptcy regime, shows no inclination to change this policy. The ruble has depreciated by 1.5 times in the last 6 months. At present, neither the spirit of the times nor the spirit of the regime has changed. The state system, born after the 1998 bankruptcy, is both stronger and weaker at the same time, and if it collapses, it will not in pieces, but in its entirety. Let us now turn to questions about that collapse of the financial system in Russia. Firstly, the technical reasons for the insolvency were relatively simple. The policy of keeping the ruble exchange rate fixed had been in place since 1995 and was initially seen as a step forward compared to the chaos and inflation of the early 1990s. However, in 1997, global circumstances changed. Oil became cheaper, and the financial bubble burst in Asian countries. At that time, the policy of holding the ruble exchange rate constant should have been cancelled and allowed the ruble to devalue. But this did not happen. The authorities there tried too much at once, and their options were limited. They were unable to fix the ruble exchange rate and control inflation, while losing revenue from oil and gas exports. The only way to save the economic policy of the time was a miracle. But that did not happen. Bankruptcy became the inevitable way out of the impasse created by the authorities of the time. Current conditions may be slightly different, but there are significant similarities to the situation in 1998. However, Russia is now in a much worse situation, and central bank interventions are not very effective in the long run. Furthermore, Russia's reconstruction potential is now much weaker than after the collapse of the Soviet. Thank you for watching the video. Leave a comment and subscribe to the channel. See you next video.